Hello friends, so today we are going to see how to create an iron fly and according to that how to do the adjustment. So that we are going to do it with the help of simulator, that is nothing but a Opera simulator. So basically many people don't know how to create iron fly and how to adjust it. So first of all we'll just try to understand what is iron fly. So iron fly is basically creating straddle at the money. So straddle is nothing but selling at the money call and put, and at the same time based on the safety, how much safety we want, according to that we can buy the hedges. So basically how much premium we are going to collect at the money, so that much premium we are going to buy from the call side and the put side. The first thing that we have to understand here is that no strategy can give us a profit. We have to do the adjustment anyhow because market is not in our hand, and simply it will go up or it will go down. So according to that, we have to do the adjustments. Otherwise, we'll end up in the loss. Sometimes we can have a profit, but that will not be all the time. So if you are going to create the any strategy for all the 12 months, so hardly 1 or 2 months will be profitable if you do not do anything. But if you want profit, then definitely you have to adjust. Otherwise, there is no any other solution. So now starting from the scratch, how exactly we have to start? So let us take an example of, this is the calendar of 2023. So I'll start with the 2023. So if you just check out here, chart of the January. So it starts with, basically we have to create the any of the strategy because we will be dealing with the monthly strategies, because weekly a lot of adjustments are required and you have to be on a chart, we have to be on a screen all the time. So let us take an example that we don't have that much time. So if you see the calendar, uh, let us, I don't have the reference of 2022 right now. So let us, I have created the strategy at 2nd of January. The expiry will be Thursday of last week, but the here we'll just check it, there is a holiday, so I'm going to select the 25 January. But the thing is that if I'll see the January month, so it is like a consolidated month. We can see it was in a range of 18,200 to 18,000, 17,800. So it is a move of I think only 400. So easily we can get profit in this month. If we'll create iron fly, maybe there is hardly 1 or 2 adjustment, or maybe if we cannot adjust, still if we not adjust, then still we can end up in the profit because there was no movement. So for the example, we will take into consideration the February month, because if you just check it here, whenever we are creating the strategy, it is going down and it is again going up. So it is like adjustments are required in this situation. So for example, let's say we are creating the iron fly for the month of February. The expiry will be 23rd of February, and on the January, this expiry we have to select, but this is a holiday, so must be 25 is the expiry. So I have to create the strategy on 25 of January, and we'll be booking profits, or we'll be adjusting till the 23rd of February. So I hope you have got the dates, because we are going to create the monthly iron fly for the 23rd of February. So now I'll go to the simulator. Definitely we are working with the Nifty now, right now, for the example. So uh, the starting date that I'm going to select, that will be the second, not second, I think it is 25th Jan, and the expiry that I'm going to select, that will be February 23, because this is the last Thursday of the February. So now what we are going to do, this is not required actually. We can just select it over here, February 23. Now whatever strategy we are going to create, that will be at the end of the day, because 9:30 is like expiry day, so we are not going to create anything. So I'll just go to the, I'll just put an option chain, and I'll go to the 315, around 310, 315. You can just create the strategy, because market will not be volatile at that time. So try to understand in a simple way. It's coming back, I went ahead a lot. Okay, fine. So now at 3:15 on 25th of Jan, I'm going to create a iron flag. So simply, if you just check it here, this is a spot right now. On this 25th of Jan, 3:15, this is a spot right now. That is 17,896. So 17,900 we can say. So 17,900 call. I'm going to sell one lot. This is like a simple one lot strategy. We'll be doing it. 17,900 and 17,000 put we are going to sell. So now ATM straddle we have sold right now in the Nifty. So now we'll see how the payoff chart looks like. So the total premium that we have, how much we have collected, that is 300 plus 200, that is 500, and this is 80. So around 86. So 586 premium you have collected. So we can buy the hedges 500 plus or minus or 600. So let us go with the 600 because it is like around 180, 586. So it is near about 600. So 600 we have to add to this 17,900. So how much it is? 18,500 call we have to buy because 500 safe, 600 points safer we can go for the call side, and 600 safer side we can. If you just check it out, simple words, we have to just buy it over here. If you just check it out the payoff chart, so 18,500 we have to buy, and 18,000, 17,000 around 300. So just keep this thing in mind, 18,500 and 17,300 we have to buy. So I'll just go to the option chain. 18,500 call I'll be buying for the hedging purpose. The margin required will be also less because of this. And 17,300 put I'm going to buy over here. So now if you just check it here, this is how it looks like. This is called as an iron flag. So selling at the money and just buying out the hedges. So here what we are doing, how much premium we are collecting, that is 5,586 total premium we have collected. So based on that we have selected the, basically this chart will automatically give the break even point. So there we have to buy it, but afterwards the break even will change because after buying it the payoff chart will be little bit different. So now if you can just check it here, the maximum loss that I'm going to have, that will be the 9,000 on the put side and the 9,000 on the call side. So if I'll not do anything, then I'll be end up with the 9,000 loss if it breaks the break even points. So the total break evens, if you'll just check it here, how to understand this thing, 17,000 almost 500, and this is 300. So 800 point movement till this point will not be having any loss. Total range that we are going to cover, that is 800. So that is around 450 on both the sides. So now this we have created on the 25th of Jan at 3:15. Now Dave, we are not the regular adjusters, like every minute we are not going to adjust the strategy. So now let us go to the next day. So this with the help of this simulator we can go to the next day. I'll just make it small so that in a single screen you can see it. I hope now it is visible. So in a single screen. So now we can see it just 2 days ahead we have gone because 26 was a holiday. So 3:15 we can see it, that is a 97 rupees of profit we are getting it based on this. But we can see that there is a downside movement of the Nifty. And only this, whenever break evens are going to cross, then only we can adjust, or we have to adjust. In between also we can adjust, but as a beginner we let us understand first the things. Now the next day, if you can just check it, it is giving a profit of rupees 720 rupees. It is moving in that area only. Still it has not break even point. It is above the break even point. Now the next is, let's say day 1, 31 Jan. Now if you just check it here, 31 January is the here. So now this was a fall of Nifty. Still it has given us profit. This is a 31 Jan because now after this close of 17,500, still it was giving a profit of like 70 90 rupees, not like that. 31st Jan, it is opening high and closing in red, and again 1st Feb. Now let us see, because again it is going down and again there is an upside. So now in such situation, what we have to do, just let us understand, because once it will reach a break even, then only we will adjust and the 1000 profit. And one more thing is that whenever selling one lots, almost 80,000 is the this margin is required. So in that case, if you just see 800 profit, if you are getting it, it means that 1% we are getting it. If you just check it, is about 2% we are getting it within some, I think, 5-6 days, which is good profit actually. So now it is giving us 2,342 rupees on a 2nd Feb. So now still we can adjust over here, because if you can just check it here, it is going down, means there is a safety on a call side, but on a put side we can see if it crosses the break even, we can have a loss. So if you just check it here, still now we have not done any adjustment. So just it is reaching out the break even point, so we'll do one adjustment, because uh, we are still in profit, good profits actually. So we have sold 17,900 call, which is 9,600 rupees profit, and put is 6,200 loss. And again if you just check it here, call is on loss of 3,400. So if you just see 9,600, so almost 50 points, 100 points movement is there, and 50 points if you are collecting, then it gives you 2,500. So based on this, almost 300 to 400 points we can just move it down. So to be on safer side, because this is a loss also that we have to subtract from here. So if you just subtract 3,400 from this 9,600, so almost we are getting it as 6,000 rupees, which is in a multiple of 2,500. If you see, like 200 points we can come down. So what I'm going to do now, I'll be just booking out this 17,900 call. So just let us go to the profit and loss. So we can check it here. 17,900 call is at 148. So we'll just booking it out, 148 rupees. And in call also we have to book it, because that was the protection for this call bar sell. So we are going to shift the sell, then also we'll shift the hedge also by that much point. So this is 18,500. If you just check it, it is at 22 rupees, 21.95. So we'll take it as a 22 rupees, 22 rupees. So modify the position. Now next thing that we are going to do, that is 200 point shifting. As I told you how to shift it, the difference we have taken, because every different trader is having every different strategy to shift and to adjust the position. So here the simple method that I'm following. So just 200 points I'll be coming down, because 300 also we can come, but if it moves up, then it can give a loss, early loss it can give us. So 17,900 calls, so 17,700 call we have to sell it. So just I'll get option change, 17,700 call I'll be selling it out. 17,700 call I'll sell it here. Okay, so we have shifted 200 points down from the 17,900. So also call buy also we have to shift it. So it was previously 18,500. So I'll be buying 18,300 call. So I hope all of you are getting this. 18,300 call I have to buy now as a hedge, because we have to be safer, and the margin required will be also less when we buy something. So now, as it is simulator, margin we are not getting, but it is around 80,000 to 90,000, less than that only. So this is the adjustment that we have done it. Now we will see how payoff chart looks like. So this is the payoff chart. Still it is, you can check it. Previously it was like a 9,000 loss was there, means on both side, if we can't do anything, if we will not do anything basically. So now you can check it, after adjustment it is giving us a loss of 5,400 on the put side and call side also. So it is a good thing, like almost near about 50% loss we have reduced if something goes wrong. Still it is 2,300 rupees profit in a multiple of 800. If we see 3% profit, little less than that. So that much we are getting it now. Now we'll go ahead, because this is 2nd Feb now. We'll just check it out here. This is the 2nd Feb. This is a market close over here, and now how much profit we are having, that is 2,300 at a 17,600. We can just check out the spot also, 17,600 around over here. Now the next thing is, let us go ahead one day, because market moved up. So it is giving a profit of how much, 2,495. Okay, just make it small little, I hope you can see it. So it is giving a 2,495 rupees. Now one more day I'll go ahead. Now you can just check it out here. It is giving a profit of 3,387 rupees. It is more than 4%. It is on 6th Feb. So now let us check the charts. So this is our 6th February. So it is somewhere nearby 17,800. Not an issue. So now it's a good profit actually. 4% is more than enough. So we can book it over here also. Again, it is giving around that much profit only. So 8th Feb we have came here because we don't know what is going to happen on the next day. So we can book it also. This is the 9th Feb profit that it is giving. So about 2% anywhere you can book it based on the how much days we have spent, because monthly target can be 3 to 4%. That is more than enough. It is giving 4,400. Now it is giving 5,500. So if you just check in case of multiples of it, if you just check it here, it is giving 5,500 means what? So almost more than 6% profit it is giving us. Now the next is 6,200, which is beyond our calculation. Basically it's more profit it is giving. Just hardly 2 adjustments we have done. Then next is, again if you just check it here, it is 13 Feb. Yesterday it was giving us 6,200. We'll just check it out the chart. 13th Feb. So this is our 13th Feb. So it was ended with the red. So it means that, see, if you just check it here, the chart, it has crossed the lower support, we can say. I can just draw that, because also at the same time we have to see the charts also. So this was like our support line, and it is this Nifty close below the support line, so we can just exit our position from here. Anything can happen, like it is going down. So it's like that indication can be there because it is closing below this previous support. But the thing is that simulator, we are working on simulator. Let us understand how things are going. So here we can just put it, book our profit, that is 16,200. Just simply why I'm telling you, because it is closing below the previous support, so that's why only, nothing else. And next thing is that, let us say if you are not booked it, then let us see what happens next day. So it is giving us the profit of 5,400. Still it is good profit. Then very next day, see, profit is decreasing. If you just see it, 6,200, 5,400, 4,700. Some adjustment is required over here, we can say, because now today is 15th of Feb. So if you just check it here, 15th of Feb. So this is the 15th of Feb. So market is going up. So it doesn't mean that is going up, it means it's good for us. It's not good or bad for us, or simply we should adjust our strategy, because if it goes down, if it goes up, then both the case we have to do the adjustment. So now it is going up, and still I think 5 to 7 days are there for the expiry. So now we are going to adjust from the bottom side. So what I'm going to do, I'll just book the put side. So whatever put is there, so if you just check it here, it is giving 9,000 and 3,000. So almost 6,000 is the profit difference. So around 200 points we can just shift it above. So what I'm going to do is, I'll just simply shift 200 points up. So profit and loss, I'll just see it. Here is our put, 17,900 put. So if you just check it here, it is running around 64 rupees. So I'll just book it over here, 64. Modify. Also we have to book the buy put, that is 17,300, which is at 6.85 rupees. 6.85 rupees. Modify the position. So now the payoff chart will be something different, but at the same time, as I told you, we are going to shift 200 points above. So 17,900. So we are going to buy 18,100 put we are going to sell, because just we have to add the 200 because we are shifting above 200 because market is going up. So 17,900 plus 200 will be 18,100 put we are going to sell. 18,100 put we will be selling it out here. You have to just sell it out. And put buy also we have to shift by 200 points. So previously it was 17,300. So now 17,500 will be, we will be buying 17,500 put we are going to buy over here. So now let us see how it looks. So this is our payoff chart now, because it is going ahead. So still 4,735. Now we'll see what is going to happen with this strategy. So it is 315 on 15th Feb. We have adjusted because it was moving up. So I'm just telling you the adjustment, nothing else. So next day, that is. Now again, one more important thing. Now if we just check it, if anything goes wrong, we are going to lose 1,600 rupees. So that is the beauty of the adjustment. Whenever we have created the strategy at that time, it was a 9,000 loss, means how much maximum that we can lose. Now it is telling us that we can lose up to maximum 1,600, which is nothing but a good thing. And that this much loss also we can just reduce it by by shifting the put side. That I'll just tell you how to do it. Just let me shift it one more day. That is how we can just reduce our complete loss. So it is giving you 4,975 rupees, which is good thing actually. So this is just an example. In this case, we must have booked the profit previously only because it was giving a good profits. Now 16 Feb is there. Just let us go one more day ahead, because everything that we are doing is at a 315 only, around 330 in between. So it is giving us 6,000, which is again good profit. Because of adjustment we are able to get that profit. Now next is 20, and we are not even looking at the charts also, just for the understanding we are just showing you the charts. So if you just see 20th Feb is there today. So 20th Feb is, see, I told you to book over here because there was an indication that it can go down, but it again went up. So we cannot predict the market. Now today we are having, as per option simulator, 20th Feb is there. So if you can just check it here, 20th Feb is going down. Again, if you just check it here, if it is going to break this level, that is what is happened, but we don't know what is going to happen. So still we will adjust it. So 20th Feb right now, and it is, we are with the good profits right now. If you just check it here, 6,635 rupees is the profit after these many adjustments. If you just check it, and this is our payoff chart. Now next is one more day ahead we will go. Now it is just crossing the level on the downside. This is a good green line is inside, so it means it's a good. This is the maximum profit, 8,300 we can have it, and right now we are having 7,100. So it is like maximum in this range. If it is going to expire, then maximum a difference of, I think, mm, it 800 to 900 more rupees we can just earn it. And also we can book it over here also, because in multiples of 80,000, if you just check it, this is around 8 to 9% of profit we are getting right now with this iron fly and the adjustments. Now one more day ahead we'll go. Now we can check. This is like something bad happened. It is directly from the 7,000 we are at 2,200 rupees. So whenever we are standing with the good profits, I'll just tell you the one more adjustment we can do it over here. That is, whenever this situation is there and we are with the good profit, so we can just give the market some of the amount. Like we are feeling like, let's say market is going down like this, so we are unsafe on the put side. So what we can do it, we'll just see the put wherever our put is there. So it is 18,100 put is there. So what we can do it, we can just book that put, and we can just shift it that put with, let's say, 20 points, because that much we can give it to the market. So here if you just see 18,100 put is buy, so it is at 275 rupees. So it is basically in loss, 275 rupees. So some more points we can give it to the market, 275 rupees, to be on a safer side. So I'm just telling you how to adjust it by looking at the Nifty chart, because it is going down. So based on that, I have done this adjustment, because I have shown you that from the 7,000 directly we have went to the 2,200. So what we can do it over here. So 18,100 put we have booked. I'll just show you the option chain. 18,100 put, keep it in mind. 18,100 put, we will just see it. It is at a 275 rupees. So what we can do it, we can just shift it little up. Little up means towards the at the money. So towards the at the money means like to 18,200, 300, like that it is there. So if you just check it here, it is 275 rupees, but a lot of difference is there. There is no less difference. So shifting is little difficult over here, but I'll just show you the example, because it will take out our profits, because there has to be some difference, because in Bank Nifty, if you see, there is a difference of 30, 40 points, 20 points. Here, a lot of difference is there. So there is a 50-point difference is there if you just check it, and there is a 100-point difference. So what we'll do it, just simply for the sake of understanding, this premium is not good actually to giving back to the market. So 325 rupees I'm going to buy. So I'm just showing you how you can reduce the loss, or you can just be protected in the. So just check it over here now, our profit and loss chart. So in the previous day only. So this will be something like this, because we have shifted almost 50 points. So if we go on downside, it is definitely, it will be like this only. So if we go on a downside, it will give us a good profit actually. Means, because based on the chart I have adjusted 50 points up, I have shifted it. So now you just check it over here, 18,100 put. Actually I don't know what is going to happen, because this I'm not aware of it. Just basically on the chart I have taken decision that it is going down, so I'll just shift it, because there is no any other adjustment after 18,100. Only next put that I can buy, that is 150 only, 50 points. If we'll go ahead with the 18,200, lot of premium we are giving it, but it's fine. But if we'll just check it here right now, this chart is something different, you might get confused, but if you just check it here, 10,000 is the maximum profit that we can get it, and right now we are having 7,008. So this is a good situation actually. Now we can keep it like this, and we can go ahead. Let's say we'll go ahead one day. Now you can just see it, it is 28,000 profit we are getting, because there's a big fall was there over here, so that's why this much profit is. But this is not actually like we are aware of it, and we are going to like a pro adjuster we can do it. So I'll not do this, just for the understanding I shown you. So I'll make it 0, so I'll make it position open, and I'll just delete it this out, because the way we want that has happened, and we'll just consider that we don't know what is going to happen. So now we'll consider this previous situation only, that we have not adjusted anything, we have not done. So maximum we are going to lose is that is 1,600. 22nd is the last day, previous second last day, and 23rd Feb is the expiry day. Now we'll see what is happened. So just for the understanding, we may have booked this everything at the time of 4,000, 5,000, 600,000, 7,000, like that, but still we'll see what is happening here. 2,200 is the current loss, so it's profit, sorry. Now one more day we'll go ahead. Now we'll just check it out what has happened. So this is how much we have lost in this complete whole month, that is 1,200 rupees. So that is like a nominal cost. Things are not in our hand, so we can just check it out, because there is nothing ahead, because we have selected a 23rd Feb ka expiry. So this is the last end of market ended over here. So this is how you must have understood ki how I have protected the put side by just buying the put. One more, we can say we can just shift it 50 or 100 points above. That can also help us, because in that case it was 28,000 profit, but we'll consider that ki we don't know how to adjust like a pro adjuster. So if we just check it here now, what we can do it and why this is happening. So we are waiting till the calendar date 23. So like this last week of the expiry is too much volatile, so we can see that we can just book the profits till the third week of the month only. So let's say expiry or before that. So 16th of Feb, we let us see how much was the profit, and according to that, this is just for the understanding, anything can happen. So I'm just coming back some days back. So we'll just check it out here. We'll see how much is the profit on the 16th of Feb. That was the third week of the expiry. So it is giving around 4,900, means in a multiple of 80,000, means 1800 profit we are having, that is 1%. So it is like 6% profit it is giving us. So it's a good actually. 6% profit. So it is too good actually, we can say. So this is how we have to adjust the iron fly. There are different ways to adjust the iron fly. This is the one adjustment I have shown you. So there are different videos. I'll be making out our iron fly adjustments like iron condor, butterfly. So many strategies are. So this is all about the iron fly. So let us end up here.